Before we start the video, I want you to subscribe to the best Telegram channel at the first link in the description, where we show our earnings on cryptocurrencies, and not only. Our capital that we manage is more than $3 million. Thanks for subscribing. Also in the description is a links to verified exchangers when you register, on which you get a welcome bonus from me. Let's get to the video. Friends, FTX is finally dead, and it looks very much like a repeat of Musk's history. Bitcoin updated the bottom, falling below 16,000, and Elon Musk talked about bankruptcy, all in 1 week. Let's sort it out. The loudest topic is, of course, the bankruptcy of the FTX exchange, which put an end to Sam Bankman-Fried's cryptocurrency empire, though now everyone just calls him Curly Sam. Is it a joke? To lose, in 1 day, nearly $15 billion, or almost his entire fortune. Although evil tongues tell us that in fact, his liquid assets are worth nothing at all. So, Curly Sam, after Binance refused to give money, tried to justify himself by rolling out a long Twitter thread with apologies and assurances that it wasn't that bad, and that his main priority was to return funds to FTX clients. That gave some hope to the market, but you and I found the main message in that conversation, namely, a disclaimer that undid everything Sam had said, and the disturbing premonitions proved to be true. Very quickly after that, it was reported that with nearly $9 billion in debt, there were only $900 million in liquid assets available at FTX. And, literally, right after that, we learned that Curly Sam fired himself as head of FTX and declared bankruptcy of the exchange and the Alameda Research Fund. The FTX's branch, which Sam had told us a day earlier that it was completely intact and operating as normal, was also under closure. In general, you can see how much you can trust his words. And who else is looking for an answer to the question, how did this collapse happen? Well, to simplify it as much as possible, Alameda Research lost a lot of money at the beginning of a bear market. The collapse of Luna exacerbated the situation, but Sam decided to go all in and move client money from the exchange to Alameda Research to try to rebound on the exchange, and also to buy out competitors when they were in bad shape. But the bear market continued, and Alameda Research went bankrupt, with debts estimated to be $10 million to $50 million. And Changpeng Zhao was probably aware of this manipulation and took advantage of the moment to uncover this fraud and remove a major competitor from the market. And by the way, the story of FTX woes is not over yet. Today it was reported that almost $400 million were withdrawn from the exchange, and the site and applications of the site may have been infected with viruses. And the possible mastermind behind the hack, former exchange developer Samuel Hyde. I can't know why he did it, but there were rumors online that FTX was paying part of its salary in FTX's own tokens, and curmudgeon Sam was agitating exchange employees to invest their savings in the site's stock. And most did just that. So, we can now, in the comments, do press F for FTX. Elon Musk also spoke on the subject, as always, using another meme to do so. Do you think Elon Musk draws these memes himself, or does he have someone specially trained to do so? About still the richest man in the world. We'll talk closer to the end of the video. Don't switch. As of today, we have a new bottom for Bitcoin at 15,600. Also, locally, the first cryptocurrency is still in a downtrend, but during this fall, there was a moment when the price rose above $18,000. It happened on the release of statistics on inflation in the USA. It fell to 7.7% in October, well above the 8% forecast, and that is a very strong bullish signal. The S&P 500 responded by rising 5% in just over a day, and almost back to the level. It is important to note that the so-called core inflation, which was showing growth last month, also went down. These statistics suggest that the first rate hikes have finally started to have an effect on inflation. Consequently, they may move to lower the pace of rate hikes as soon as December or after one meeting. As of today, the markets are giving an 80% probability that at the meeting of December 14th, the rate will be raised by only 50 points. That is, we will see a softening of monetary policy in a month. What conclusions can we draw from this situation? First, we have a great incentive for continued growth in the stock market, which will help keep the prices of cryptocurrencies as well. But as it seems to me, and this is only my personal opinion and by no means financial advice, it is too early to talk about the return of bulls to the stock market. I expect more nasty surprises, in the form of black swans, before the end of this year and early next year. So, I wouldn't be surprised if the fear of FURS could be replaced by some new problem. Oh, and FURS, too, hasn't said its last word yet. And the second conclusion is that the FTX scam is a very big blow, of course, but the cause with inflation in the USA is strong indeed, and the Bitcoin reaction should have been many times greater. My feeling is that we, quite possibly, could have completely reversed and forgotten the dump that Crowley Sam set up. But that didn't happen, which points to the extremely low demand for Bitcoins and other cryptocurrencies at this point in time. That's normal for a bear market, but the mere fact that prices of other risky assets are rising may not be enough to see a return to growth. We really need to find our own reasons for the cryptocurrency market to rise. When will they come, and what will they be? The first to know will be subscribers of our channel in Telegram. You can join their ranks by clicking on the first link in the description. In the finale, we have some news that can't help but be alarming. Elon Musk began to say that in the future, Twitter may become bankrupt if the company will not soon fix its problems and will not begin to bring profit. How trustworthy is Elon Musk's statement? I remember how he manipulated Tesla's stock price, promising to buy back all of its shares from the market and, again, to make the company non-public. No buyback followed then, and Elon Musk was investigated by the SEC, and, even, for a time, was formally removed from the management of the company. Twitter stock is no longer traded on the stock market, so it's definitely not a manipulation of its price. But, what is it really? It's very hard to understand. After Elon Musk fired all top managers and 50% of ordinary employees, and demanded from the rest to immediately return to work in the office, one could assume that Twitter is really not doing well. First of all, we need to read Dogecoin fans, because if there will be no Twitter, then its implementation in social network will not take place. But the rest of the crypto community, there is also something to worry about. After all, everyone has been waiting for Twitter to become a haven for new crypto investors, and it will be the main driver for mass implementation. However, so far, something like that we can only dream about. Elon Musk himself is busy cutting costs and finding new ways to monetize. Otherwise, his $44 billion purchase will turn out to be a very bad deal. As a reminder, your likes are the best support for the channel. And the cat will click the subscribe button and turn on the bell. Definitely won't miss the release of the next video. Thanks for watching, your Cryptanic.